Hi, I'm Ling, Senior Director for JLL's Retail Advisory Team in Singapore. In January and February, the retail sales index, underpinned by the Chinese New Year spending, rose 1.9% year-on-year, reversing the 2.7% decline in the last quarter. Spending can be attributed in part to a 54.8% month-on-month increase in Chinese visitor arrivals, stemming from the 30-day visa exemption between Singapore and China that took effect in February. This past quarter, we saw diverse occupier demand, notably from local and foreign F&B establishments, athleisure retail, and new wellness concepts. This healthy demand supported the quarter-on-quarter rent growth for prime floor space, according to our latest property market monitor. On the supply side, the island-wide vacancy rate rose marginally, quarter-on-quarter due to business consolidations in selected malls. Capital values across the three sub-markets rose quarter-on-quarter as well, underpinned by rent growth and relatively stable yields. With Singapore attracting more private wealth to its shores, new and existing international luxury brands continue to expand their presence in Orchard Road and broadening their offerings. Many such brands are either fashion houses or those in the watches and jewelry trade. Recent luxury brands that have established or expanded their presence include Louis Vuitton at Ngee Ann City, as well as Christian Louboutin at Iron Orchard. We are also seeing a rising number of chain brands, particularly related to the sports and lifestyle category, establishing flagship stores in Orchard and Somerset malls. Our recent white paper on Singapore's retail sector suggests that these flagship stores generally carry the widest selections and latest products with limited edition items and customization opportunities that appeal to trend-seeking customers. One such flagship store is Nike Orchard Road, which opened in January. Investments capitalizing on the rejuvenation of the Tanglin sub-precinct and the government's Strategic Development Incentive Scheme are also paving the way for the redevelopment of aging assets. These redevelopments could incorporate arts and culture offerings that tie in with the government's long-term plan to transform Tanglin into an arts-infused mixed-use neighborhood. Singapore's reputation as a stable business environment, a resilient domestic market, and ongoing government-led efforts to support leisure and business tourism will continue to support consumption and occupier demand in the coming quarters. Hence, retail sales and rents for prime spaces should extend growth in the medium term on the back of tightening vacancy rates. Macroeconomic headwinds, as well as retailers' sensitivity to rent hikes amid rising costs, and an uncertain operating environment could, however, moderate rent growth potential. On the capital markets front, the positive rent growth outlook, scarcity of quality retail properties, and growing investor interest and capital allocation should in turn drive capital value growth in 2024. Thank you for having me for this quarter's Retail Real Talk.